Hi everyone, and welcome to Red Alert. Today's discussion is about Apple's recent market performance. We're going to dive into what's been happening with the company's stock and explore some of the reasons behind its ups and downs. Let's get started. So, did you know that Apple is a big tech company that makes things like iPhones, iPads, and Mac computers? Of course. Who would not know? People can buy pieces of the company, called shares, and when they do, the value of those shares adds up to something called market capitalization, or market cap for short. Recently, Apple's market cap went down a lot, over $200 billion in just a few days. That's like losing a ton of money. It's the biggest drop in value the company has seen in almost a year. The turbulence began on August 3rd when Apple reported that its iPhone sales had fallen well short of Wall Street's estimates for the June quarter, leading to the company's overall revenues dropping 1% year-over-year to $81.8 billion.
Some alarming news from Apple. The company has lost $1 trillion in a market value in just 1 year. Apple's market cap dropped below $2 trillion in trading for the first time since early 2021. The loss comes 1 year to the day after Apple became the first public tech company valued at $3 trillion.
Now let's figure out why this happened. Imagine if you were selling lemonade, and you usually make a lot of money from selling lemonade. But this time, not as many people wanted to buy your lemonade. That's kind of what happened to Apple. They said that the number of iPhones they sold was lower than what people expected, and that made their overall money go down a little. Even though Apple has other ways to make money, like the App Store and stuff, iPhones are still a big part of their earnings. When fewer iPhones are sold, it's like they're missing out on a big piece of their money puzzle. Some experts who study this stuff said that Apple is going through a slower time right now.
Apple is at a premium multiple on an absolute and a relative basis, and the business is really taking a growth break. And I think those two things are hard to say that you need to overweight Apple with that type of setup. I think over the near to intermediate term, you're kind of juggle some comparisons on the iPhone that'll be a headwind and a tailwind. But I think the bigger issue is it's hard to really imagine what's going to reignite growth at this place for Apple. You've got an iPhone 15, which I'm sure will be a great device, but it's hard to see that transformative to the demand characteristics of this company. And you've got some new ideas with Vision Pro and maybe an Apple Car, which will take years to play out. Vision Pro, I think, is really interesting. But it's not going to really meaningfully move the numbers northward in the near term.
Analysts' downgrades have also fueled the fire. Rosenblatt's neutral from buy and Loop Capital's shift to hold are part of the natural ebb and flow of the market. Furthermore, the weak guidance for the upcoming quarters has been cited as a reason for the recent sell-off. Let's remember that analysts' opinions can vary, and they often adjust their ratings based on short-term fluctuations.
Certainly, that's possible. I'm not going to thumb into my model today an ESPN deal with Disney. I think that would be great. I think that is, hope over kind of substance to go there today. I think that it could happen. I think that the app opportunity at Apple is great, right? They don't have to pay themselves a 30% cut. So they have great promotion to their installed base of, over 2 billion devices. So.
You know how sometimes when you save your allowance, you have a plan for what you want to buy? Well, Apple told people what they think their money will look like in the future, and it wasn't as good as what others thought. That's why some people decided to sell their Apple shares, because they were worried the company might not make as much money as they hoped. Let's now discuss value. The value of Apple has been under debate for a while. Yes, its price-to-earnings ratio appears to be greater than that of the S&P 500, but this is not an apples-to-apples comparison. The premium reflects Apple's strategy shift towards high-margin services, which has increased net revenue and contributed to the company's strong bottom line. This premium isn't just for show. It demonstrates Apple's continuous dedication to invention and growth. People really like Apple, and they believe the company is valuable. But some people think Apple's value might be too high compared to how much money they're making. It's like saying a toy is really awesome, but maybe it costs too much for what you get. Apple's shares were selling for a lot more compared to other companies, even though they weren't making as much money as before. Some experts think Apple will still do well in the future, even though things are a bit rocky now. They say that even though not as many iPhones were sold, there are still lots of good things happening. For example, Apple's services part, like the App Store and Apple Music, is making more money. And they think new iPhones coming out soon will make people excited to buy them. But not everyone is as sure about this. Some experts say that Apple's problems might not go away quickly, and that could be a challenge for them. They worry that if iPhones don't sell well, it might be harder for Apple to keep making a lot of money. So in the end, it's like a puzzle with lots of pieces. Apple is like a big puzzle, and right now some of the pieces aren't fitting perfectly. Some people think Apple will figure it out and do great, while others are a bit worried. But remember, it's all part of how businesses work. They have good times and tough times, just like we do. Remember, even if things seem confusing, it's important to ask questions and learn more. See you next time.